Hey guys, so let's go over what's happened yesterday and kind of approach the market with a bit more of a level-headed outlook versus what I am seeing on the likes of social media, on Twitter. Many people are saying this is it, it's now time to pump higher, and I do believe this is true, but we do not have to get ahead of ourselves. I mean, first we have to at least wait for price to break out and just wait for several factors to actually confirm what is occurring in the markets. Now, as you can see from the weekly time frame, we are still fulfilling that higher wick fulfillment right now. Higher there, higher there, higher there, higher there from the prior candle body as well. We have seen some resistance around the moving average and this region here after this huge indecisive weekly candle. However, we have now seemingly fulfilled the weekly pullback with only being Tuesday. 2 days in the week, we've already seen a fairly large momentum to the downside. Now, remember yesterday we did say breaking that box would be a real concern because then we would start potentially hitting the 4,920 region and then potentially dipping down to the 4,600 zone. So as of now, if you just see this box here, we did fall a little bit below and break below as we have seen several times before as well. So going over to the 4-hour time frame here, just to see this a bit clearer, you can see we've had many breakouts before that quickly whip back into shape. So all I'm going to do for this certain, I guess you could say, box is having a look at this support level here. Perfect support, tapped and blew up, came down, rejected falsely, just as it has many times before, and then started breaching its way back in higher. So all we'll do is we'll extend this out now, as I do believe this could be lasting a fairly long time. And on top of that, if you actually push this down and extend this out to where it was, it actually pretty much aligns perfectly with this manipulative spike here as well. So using both regions as a real kind of threat zone, just for more of an intraday and intraday purpose, just look out for these regions. If you are entering long positions, again, stop losses have to be extremely wide for such a choppy market in these current conditions. I'm talking stop losses literally below 4,920. Do not go in too heavy on positions during this current market situation. But overall, looking at this now, this has not changed the overall short-term bias of the upside to 5,800 and beyond. I do believe this should still propel us higher. I mean, if you look on the daily now, the higher lows are still forming after every swing. If we do even see another retest of here, maybe, it still would not consider it a potential reversal right now. So if I just get rid of this for now, actually, this is quite distracting for the time being. Going over to this 4-hour, what we will do from this point onwards is drag this down a little bit lower to where we saw the candle close, as it has now technically formed a new box. Now, you can easily have it both ways and consider them forced breakouts. However, for the sake of this and being a bit more proactive with the charts, I do believe it's better to keep this in touch with the lowest swing so far. So as you can see, 1, 2, 3, 4, 5. We actually have 5 higher highs ascending right now, so it's not too concerning for me. We do have this low that's just formed. However, we need to see a solid reversal and breach higher to confirm if this will be a failure to break to the upside. But overall, for the short term, still looking at 5,280, still looking at around 5,400 or 5,370, give or take around these regions, which could then cause the final pullback yet again straight to touch this region or dip back lower. So I am just remaining cautious of this zone right now, and I believe you all should be as well, because you can be seeing a fairly volatile journey throughout this region, because all we're doing now in simple terms is consolidating back and forth from a box, breaking out, rejecting it, and then moving up, going down to here. The same just keeps occurring again and again. I mean, you're breaking out, you're falling through, you're breaking out, retesting the bottom, just as we did yesterday, and then you start excelling higher. So I wouldn't be surprised to see if this thing actually does just start breaking out, testing this level, tapping maybe this box once again, which is why my stop losses are remaining very low for security purposes right now, to avoid potentially getting whipsawed in a major stop loss hunt, which seems to be occurring very consistently in the market right now as well. So this is more of those swing trade opportunities. I wouldn't really be trying to day trade the market in such conditions, just really not worth it trying to scalp or capture intraday moves, because if you just have a wide stop loss and target a much wider region, you are likely to make more money than trying to enter big and then getting wiped out on a quick whip to the downside or upside. In saying that, however, of course, if we are looking to start breaking down this region, concerns are once this level breaks where that first ever daily candle that rocketed closed, that has been a very crucial region for us, which we've been respecting, which does tell me, again, using the theory from the Wizard Wednesday's education that I was teaching you guys, technically the floor is getting pushed higher and price is now resting on a new floor versus where it was once resting over there. So we are moving in increments of $100 as well to the upside, which is a positive sign. We could start seeing these floors increase and then explode even further. But in terms of downside possibilities, we have the moving average over here as well, slowly creeping and confluencing with the other MA. Again, these will all be disclosed very soon, confluencing with around 4,800 to 4,600. So any real threatening break below the 4,920 region will just plummet us straight to that zone ideally. So I don't really want that to happen right now. I would rather we just continue with this upside surge, because overall, in the grand scheme of things, as you can see, we are looking pretty good to just continue ascending and maybe just have one more large candle that explodes just like this one here. That's all it will really take just to fulfill that quick manipulative run up, 5,800 breaching almost $6,000, bang, then we can start reversing. And this could actually happen by the end of the week, because what could occur from there is a great potential reversal. Now, let me try and capture a equivalent move to see if this theory could also come into play as well. Having a little look from the breakout region, approximately over there, that would be too large, but from there, from the very lows of the support, you can see a very similar movement here, which again would confluence with, track that there, we have the Fibos there, we have the other Fib just below as well. So we have a fairly good reason to believe this could be occurring. We have 1, 2, 3, 4 weekly candles. We have 1, 2, 3 at the moment, potentially could be the fourth from that level as well. And what could really be happening from here is once we see the end of the week closure, hopefully around these regions, we could start identifying those short positions as well. Because once the weekly candle closes, that's when a meltdown usually occurs on the Monday onwards. So it can always be a good week as long as you are starting. As you can see, let me go back actually. So in short terms, the weekly candles that actually reverse after these huge swings from Fibonacci levels, they always start reversing from the very top. There is never I guess you could say there's never a spike up and then a pullback, only in very rare circumstances. It's usually a rally. Price then remains at that level for the end of the week closure. Once the new week begins, the meltdown also occurs. So waiting to see a meltdown of some sorts, it should be ideal from these scenarios as always. So again, nothing has changed, but I just feel updates are necessary if you're trying to day trade, swing trade, buy more crypto. It's just good to be patient and focus more on a swing trading perspective. Now, a swing trade, I mean, even entering from these regions or these regions here, this is why I had my buy order set around the Fibonacci level there. Wide stop loss, and if I rally up to there, in terms of pip movement in the likes of the Forex market, let's just say risk reward right now, we're looking at around 221 pip risk, which is obviously huge, but this is crypto, and the potential upside is almost 900 pips. So in short terms, the risk to reward is absolutely outrageous, and I know it may seem insane, but this is why you lower your position size and actually target a much larger movement without trying to catch, for example, so on the 1 hour right now, again, moving average is holding quite well. Just being cautious, guys. I think this region is just going to continuously be tested now before we eventually just snap. So I wouldn't be surprised if it even taps this level once more. But for now, stop loss is nice and safe just below any of this mess and letting the market do what it needs to do. But in comparison to, say, a 4 hour time frame, let's say you enter now and you put your stop loss just below this box here with the traditional likes of the Forex or stock market movements, and you're going for 81 pip risk for a potential 175. I mean, looking at every single time this market has spiked lower, your stop loss is going to get hit. And then if you want to start playing it safe for a short move up to here or there, again, if it does work in your favor and you are in profit and you're happy, then by all means do so. But if you're risking literally 180 to 190 pips for a potential 280 pips, yes, I know the risk reward can seem fairly good, but considering how volatile the market is, it's really not deemed worthable in my eyes. So going over to XRP, what do we have here? Yet again, the trendline retest came through. I wasn't really expecting this to break much lower, but that trend line came through just again. So all we're going to do is adjust this a little bit more now to be in line with this and also this here. So what we originally had was this level here holding through with some manipulation of these two, 1, 2, then we spiked lower. Now we dipped into that zone as well, that region approximately 0.31220. So just dragging that now to extend it, we can see a perfect closure on this region once again. Weekly candle right now as well. This one has actually closed lower for the time being, but dips lower. However, with most rocket ships that occur with XRP, you can see we are closing lower. 1, 2, 1, 2, 1 2 1 2 1 2, and of course the inverse was said there as well. So looking at where we are right now, we are still ascending on the XRP side as well. There isn't too much to be concerned about, but the way it has been moving is why I have been concerned, and that external trend line will remain there. However, we also have technically this as well coming into play. As you can see, steady rising, very good to see. It's just guiding us higher every single step of the way. You're just seeing some spikes pop through every now and then, but overall the longer term bias is fulfilling itself week by week, day by day, and hour by hour pretty much. We're just seeing some volatility through. And looking at the pretty much the strength of this level as well, around 0.38, we've tapped, we've seen spikes, we've seen so many things happen, but we have not managed to close above this level yet. So closing above this level is very simple and very easy results to 44 cents, and of course up to 48 to 50 cents as well in a very rapid spike. My only real concern for XRP in terms of downside is of course if this trend line breaks, that is taking us straight down to 30.5 cents without question. We've seen it many times over. I am hoping this can sustain for now, seeing as we are at a cross reference of both trend lines. It should be pretty good to remain solid, especially considering BTC right now is being a fairly strong soldier as well in this crazy market. Going over to Ether as well, so again a bit of a concern with that trend line which I mentioned. Let's fix that up. There is that potential downside spike once more, the 1 2 3 trend line bounce and then rocket ship higher. However, looking at where it closed yesterday as well, absolute precision pretty much on that box zone once again. Little bit of a room for a pullback. What we do now, again, look at where that closed, that closed, that closed. Now we extend this out to here to cater for potential future manipulative drops as well. As you can see, huge sell-off precisely there. Nice alignment with the prior level, $155. Now we are ascending higher. I believe on an intraday level, this is probably a 78.6 or a 61.8. Yeah, so we have a 61.8 fib as well coming into play, which obviously does potentially result in that downside movement to the trend line, something I would still be cautious of, and just please be careful, because if it breaks lower, it could test through and then ascend higher. However, overall, I do believe once this arrow is, as you can see, just illustrated already, once we've actually broken through this level, I believe this exact process will unfold, very similar to the BTC spike and retest as well, whereas XRP is in a slight different territory right now, which is a bit more unpredictable than the rest of the market. But hopefully for now, this shouldn't really be a case of a major reversal. I mean, we have seen it happen a few times before, but looking at this major large sell-off, we've seen many candles like this before that look absolutely threatening to the price action, but yet it does ascend its way higher. The only reason you're seeing a slight pullback right now is this level here. On an intraday level, we'll just mark that a different color for a bit of visibility. So we've basically broken below this support level, now retesting as resistance. All we need is a clear break above to confirm the bullish bias higher. And then again, once we've broken above, I do believe any spikes to the downside are not threatening at all and nothing to actually be of concern. So guys, that's pretty much it. Just a little update. Wanted to make sure everyone's aware of what could possibly occur. Should we see the worst case scenarios, again, it wouldn't be too artificial in terms of manipulative to the downside, but a spike could dip down to that 140, 136 region before closing back on the trend line as well. So just exercising cautious whilst the manic continues. However, for the time being, I'm feeling pretty confident this could be a nice continuation higher for the short term. And again, remember guys, we are not focusing on many different aspects of the market. It's very simple. We are anticipating overall, regardless of even if it spikes down to here, the overall momentum we are believing will take us higher. Looking at spikes here as well, as you can see, there's trend lines all over the place. There is still a huge room for downside to occur, but we can still ascend every step of the way towards that region. And again, if this does eventually begin abiding, if price gets up to this region here, which I doubt it would because that's in August and September, once it's up here, it could see a breakthrough, a pullback, etc. So overall, we are focusing on $5,800 to $6,000 in the short term. From there, I do believe this could actually start progressing back in within these trading regions. Anything that happens in the meantime, whether you're day trading or swing trading, do ignore any downside swings. If you're looking to catch those, take note of the downside potential breakouts, because that's where you can catch a favorable short to potentially re-enter long as well with a slightly better entry. However, overall, we are focusing on these targets of this region here, regardless, filtering out all the noise that's going on, then we are targeting a pullback to this zone and potentially even lower to see if we can actually see one day that break below $3,400 to dip in to the 2000s and 1000s. And then from there, I do believe as we start nearing 2020, absolute insanity will begin progressing and commencing towards the upside once more. So as of now, not a single thing, despite all of these swings, has impacted or changed the overall bias. There is no threat to the downside as of yet. We are letting this unfold in good times. Keep your stop losses wide, keep your dollar cost averages sensible, and you will be fine regardless. Now let's focus on these swing trades. Let's go for longer term targets and see what we can achieve over this coming week.